What's up? Welcome to the BitLab Academy Daily Show. I forgot what I was about to say there. That's why it looked like I had a stroke. Good morning, good afternoon, good night. Welcome to the BitLab Academy Daily Show, daily morning stream every day, 10 a.m. to about 11:33-ish, 11:35 a.m. every day, Eastern time. We got a wonderful guest in the house today, our brother, Mr. Caleb Franzen. I'm going to throw it over to him in here just a moment. I just want to say thank you to each and every one of you for showing up on a daily basis. We actually had two of you regulars here in chat were in the studio yesterday for several hours, just kind of walking around, meeting people, talking. It was really, really nice to spend a little bit more time with, people that we see in the comment section actually here in studio. And again, able to sort of just share physical energy with somebody and not just talking at a digital screen or being keyboard warriors as we all are. Thankfully, and I have to say this to each and every one of you that's watching, I must say that I appreciate that this is a channel of empowerment, encouragement, and growth. We don't have many, if any, trolls here. The one or two that we have, found their way not to be here anymore. And, I encourage anybody, even trolls, to be around, but only do it if you're going to be the best version of yourself, because that's what we're here. That's what this is all about, is fostering growth and giving people the tools. And part of the tools is encouragement in the community and the team that we surround ourselves with. So if people that, you go on some other streams and you just see people just hacking away, it just bums me out. So I'm very happy to say here in the BitLab community, we have such a warm and welcoming environment. So with that being said, I'm not going to do a long intro today. Again, my name's Kellam. If this is your first time, I guarantee you it's not going to be your last time. Hit that like button, hit that subscribe button, drop 3 elbows on that bell. Let people know, or let your YouTube know that you want to be notified when we go live here. We are going to be doing more content here now that we're getting the final stages of the launch of the BitLab Academy sort of done. I just want to shout out again with that. It is live. We're pushing a bunch more content to the trading strategies folder by the end of this week. And for anybody that's not in there yet, if you go to bitlabacademy.com, on the very top right area, you can hit enroll now. If you enroll now, you can get an extra 30% off using the code GIVEME30. So let me go ahead and throw it over to my screen really quick. If you haven't yet, make sure you come right here to the BitLab Academy page, which is at Academy BitLab. Put your mouse over if you're not following it. Hit that follow button. Hit that retweet button. Hit this little like button, and essentially, once a week we do a drawing, basically of all the people that are here watching and supporting the growth of this channel. We like to give back to all you, and one of the things that's great about this is, it's not like we just want you to retweet these posts. We're trying to make it evident to people that are just perusing around, through your friends and family, through my friends and family, through all of us. If we expect this digital asset ecosystem, and take the digital asset ecosystem out of it, if we expect the people in our lives and the people around us, if we want them to be better, then why not support things that are trying to provide those sort of tools to do that? So that's what this is all about. Now, once you do that, let's just go ahead and take a brief look at Bitcoin. Just a brief look here. Look at this. Okay, if we zoom in on this really, really big, look at that. It means we're going to the moon. We're going back to $78,000.22. This is not what this means, and we're going to talk about that. This is, of course, feels good. We got a bullish pump. Getting a little bit of a bull flag here, but what other things should we be paying attention to when we're looking at these charts? Do we get over exuberantly excited? This starts pumping, and so we buy right here at the top of this wick. Is that the right buy? I can't give you financial advice, but 100% of all data suggests that buying at the very top of a wick says that is not the smart buy. That means that you are held hostage by your emotions and not practicing a plan, not practicing a strategy. And with that being said, I'm going to throw it over to my main guy, Mr. Caleb Franzen, because he knows strategy. He knows, not only are we talking about Bitcoin and digital assets and he's invested in these things, but he's also got a broad exposure to traditional assets as well. He's been in the game for a long time. Many of you know him. Welcome back. How you doing, my brother?
What's up, Kelly? Good to be here, man. I know it was a last-minute invite yesterday, but I'm super glad we were able to make it work, and looking forward to the conversation.
Well, just so you know, Caleb, in my mind, it wasn't a last-minute invite, because I was like, you know what? I'm just going to ping you. We're going to kind of have a loose once a week thing, and I'll ping you a day or two before. And so I'm going to keep doing it. I'm going to keep ringing your bell. So I'm just happy you're here. How are you feeling? You know, you didn't make it out. I didn't see you at Bitcoin Miami. If you could tell, I'm buzzing a little bit. I came back from there just feeling live and recharged, and talked to a lot of I talked to the crypto banter guys and Cryptos R Us and Crypto Face, so many people with so many different strategies. But one thing I found ubiquitous between every one of them, all these people that have made a successful name for them in this name for themselves in the space, every single one of these people that I talked to, Crypto Crow, Crypto Zombie, despite what anybody may think about any of these individuals, whether any sort of negative vibe, every single one of them, every conversation I had with all these various different influencers that are at the top of the field, all of our discussions and independently were revolved around how can we provide better tools to the people that are watching, and why we don't need to, there's no competition between any of us. Even you and I, Caleb, we have, we have our Twitters that we do, but we don't compete. We try to cross collaborate and figure out, how I learn from things you say, and maybe one day you may learn a thing or two from something I say, but I'm trying to get to your level, But we're supposed to be doing this as a community, and that's one of the things I love about you, Caleb. You're always driving forward, and you share so many tools. So what are you feeling about the markets right now? What tools are you using to, one of the things I've been talking about coming into the end of May is this sort of course, we've talked about this huge cloud over the digital asset ecosystem with the questionability of the global markets right now. But I feel like it's a heightened sense at the moment with the debt ceiling debates. And I know we don't want to talk about that I saw your Twitter post, because there's no way we can know what's going to go on there. But then we have potential things going on with China. Let's strip all that away and let's look at actually just the data on the chart. What are the charts telling us? Taking away all this speculation that everybody keeps trying to bring into the mix right now, when we can't have an answer to until it happens anyway.
Yeah. So let me go back to something that you were talking about earlier, which is, I'm really of the belief that like a rising tide lifts all boats, So with respect to other analysts on Twitter, on YouTube, who have newsletters, whatever the case is, like, I'm always, so many people have been super kind to me. Kelly, you were one of the first to kind of put me on and give me a bit of a platform. And so as much as I can, always trying to do that back with other people and always pass along that kind of good energy. So exactly like I said, a rising tide lifts all boats. And I firmly believe that as well. So like one other interesting thought that I've always kind of thought with all of this anyways, is there's kind of this saying that I forget who said it, was like a rapper, but idols become your rivals. And yeah, I always loved that saying back in the day, but especially since I've kind of gotten more in the public sphere, it's really awesome to kind of flip that. And instead of having idols become your rivals, it's like idols become your peers. You know what I mean? And it's like these people who I looked up to 4, 5, 6, 7 years ago, I'm now connected with on Twitter. And it's like, I'm no longer competing with those people. That's not how I see it. It's like, oh, wow, now I get to try to collaborate with these people. And I think that's such a better mindset.
Dude, I know exactly what you're talking about, because I remember when and it wasn't me, you just put out great content. I found you when you had like 600 or 1,000 subs on Twitter. And I was like, and I brought you on. And now I tune in. I'm like, this dude's on a Twitter Spaces with Peter Schiff. What's happening right now? Like, killing it, dude. You're doing such a great job, man.
Thanks, bro. Okay, but let's pivot back to the charts and the things that people actually want to talk about. This is it's a fun little bonding moment for you and I, but okay, let's talk about it, right? With respect to the charts, I've been quite bullish on Bitcoin as soon as we broke above that short-term holder realized price back in January. And so I think for me, that's really kind of been a line in the sand. As far as I'm concerned, right now, that's still around 25 to 26,000. And so we haven't officially retested that as support. But I think another main kind of line in the sand for me, aside from on-chain data, is looking at, just kind of classic statistical indicators, looking at the 200-week exponential moving average. And so again, last time I checked, that's right around 25.4, 25.5K. And so for me, I think that there could be a little bit more downside in this little contraction that we're having. But I think that so long as we remain above those two kind of longer term indicators, statistical levels, whatever you want to call them, I think the bias has to be to the upside. And so we can look at some of the more short-term dynamics. I've been looking a lot at like the 24-hour RSI. So you can look at the 1-hour candles and look at the 24-period RSI. So we're looking at one-day RSI strength. And we've been in a bullish divergence there. And so we haven't really kind of seen the official follow through yet in terms of price of Bitcoin. But when I look at the price on more of a short-term basis, we are starting to make higher lows over the course of the last week or so. And so I think from that perspective, we might see some of that follow through. And hey, maybe the price action that we all kind of woke up to this morning is kind of a precursor for that. I think I don't even know what the equity markets are doing today. I just got back home from an early morning, afternoon adventure. But I think that, even when I look at the stock market, I know a lot of people are complaining that, it's just the NASDAQ 100 leading everything higher. It's just 5 mega cap tech stocks leading everything higher. This is exactly what we would expect to see, though, I think, at the birth of a new uptrend, because what you want to see is the best players on your team performing like they're the best players on the team, right? Like last night, LeBron James had 40 points, 10 rebounds, and 9 assists. They didn't get the win, but it was a nail biter. They lost by 2 points. What if LeBron only had 10 points, right? And you just have some guy off the bench who's giving them 20, right? There's no way they win that game. So you want to see your LeBron James, your Steph Currys, your Kevin Durant's leading the team to victory, right? And so obviously we need to see the follow through from the other players on the team, AKA the other stocks in the market. But I think when we look generally, new 20-day highs, new 50-day highs, new 52-week highs, we're seeing broad-based momentum and strong internal metrics for the S&P 500. And so if there's bullish tailwinds for stocks, which there have been for quite a while now, I think that there's just as well bullish tailwinds for Bitcoin and Ethereum. I don't know about so much about the rest of the altcoin universe, but I think that, they've certainly given back a lot of their gains, while Bitcoin and Ethereum have just kind of been moving sideways. We're obviously down about 10, 12, 15% from the year-to-date highs, but that's nothing out of the ordinary for something like Bitcoin. So as far as I'm concerned, this is a normal consolidation, potentially within a broader uptrend.
Well, there's a sort of, and I don't know how consistent it is or if it just got made popular in the crypto ecosystem 2 years ago and it's just sticking, this whole sell in May and walk away. And I feel like if I were to guess, just looking at the Bitcoin chart, I think there were some people saying that, but I've been feeling for a few weeks like it's to me it looks like there's a strong likelihood that we're probably going to get a pretty impactful June into July, which is not something I would have guessed, December, so it's like, I don't know, I feel like the market is shifting in, I don't want to even call it bizarre ways, but it's getting more clear that, markets in general right now are kind of on their own path. When I interviewed Will Clemente a few weeks ago, he pointed out that, it's like if Stanley Druckenmiller talks about how uncertain he is about what direction he thinks things are going to go, then the everyday man's probably, completely at a loss for guessing what's going on. So are you seeing anything in the traditional asset ecosystem? I know one of the things that's been just a lens of worry or uncertainty is, the yield inversions and all this sort of stuff. And I know about it, but I don't know about it deeply. And I know most people that are just foraying into crypto don't even know how to contextualize or draw insights from what that means as to how it correlates with what it could mean for markets when trying to price things into the future. So how is that outlook looking right now? And is there anything that looks like it may have just been not a fluke, but a temporary reaction to these ongoing hikes that we are about to see pause? Is that going to reverse? And how do we draw insights from that looking at the crypto market?
So yield curve inversions kind of betray a vital component of finance in general, which is the time value of money. And so, we don't need to get super into the weeds on that, but it fundamentally does not make sense to have shorter term debt yield you a higher return than longer term debt. So, it betrays the simple time value of money that you learn in entry-level finance courses.
Right.
And so when we look at, those relationships right now, and a lot of people focus on the inversion between the 10-year and the 2-year treasury yield. I tend to focus a lot more on the 10-year and the 3-month treasury yield. That's what Campbell Harvey wrote about and studied in his dissertation that, really brought, he's the father of the yield curve inversion and really kind of implementing that analysis back in the 70s, I think it was, when he got his PhD. And so that was the relationship that he focused on his dissertation. So I'm going to go with what the founder and creator of the signal focuses on, not the 10-year and the 2-year. And that's, deeply, deeply inverted right now. And so even if we do look at the 10-year and the 2-year, I think I was on Twitter earlier today, just kind of scrolling, and I saw something that it's now, it's been inverted for the longest amount of time in 40 years, meaning it has this negative relationship. And to be quite honest, there's no correlation between the magnitude of the inversion or the length of the inversion and the severity of a potential recession. There's no correlation between those. It's like a slight inversion or a massive inversion is still just going to lead to a recession generally as an indicator, but it doesn't have anything to do necessarily with the magnitude of the recession itself. And so I think that's really important for people to kind of recognize. I think one of the reasons why we're seeing such a significant distortion in basically the treasury market right now anyways, we won't get into it because I'm like so averted to talking about it, but it is related to the debt ceiling, but it's also the fact that, we continue to have a repricing of more Fed interest rate hikes. So, people have been talking about since, the beginning of March that there's no way the Fed can keep raising rates. They've raised rates an additional 0.5% over that time period, right? And every time it's like, that was the last one. And I've been hearing that rhetoric since November of last year. That was the last one. And every single time, 2 weeks later, we're talking about another 25 basis point rate hike. And so here we are again, basically pricing in another 25 basis point rate hike. And I know so many people are caught up in looking at Fed fund futures from the CME tool, and I certainly reference that as well. But I think it's super important to focus on the 3-month treasury yield. Since December, I've been calling that the arbiter of truth, and basically encouraging investors to no longer look at the 2-year treasury yield as the signal for monetary policy and where it's likely going to be headed. And I think that the 3-month has done an excellent job of telling us exactly where it's headed. And so right now we have an effective federal funds rate of 5.08%. And the 3-month treasury yield is at 5.38%. So that 3-month yield is basically telling us to price in an additional 0.3% of a rate hike. And so look, if we get another 25 basis points more, that's basically spot on, right? So again, I'm going to focus on the signal that's coming from that bond market in particular. And I know it's being ratcheted up because of the whole debt ceiling debacle and, the whole shenanigans going on there. But I'm just going to specifically focus on it as a monetary policy signal more so than anything else.
So I'm going to I'll ask you only one question about the debt ceiling. And that is, what is your exhaustion of it current? Is it because there's so much blind speculation out there without any root? Like, what's your problem with the discussion around it? Or is it just like anger at the government because they saw this coming 8 months out and they haven't done shit about it? Like what's, or maybe all of it?
It's not anger at the government by any means. I think it's just somewhat of like a clickbaity dynamic that's happening right now because no one has an answer with respect to bureaucracy. And so it's just a song and a dance. And sure, it's going to, get more eyes and attention on, live streams or Twitter spaces or newsletters that are focused on that topic because everyone is searching for answers on it. But it's an exercise in futility. There's no answer there, or there's no like proper answer. It's all just political gamesmanship, trying to score political points, trying to make the other party look bad. Like this whole, it's a bipartisan. It's not bipartisan. It's like I forget what the other word for
fully
it is, but
partisan.
It's fully partisan. Yes, thank you. Yeah, exactly. So I don't know. It's just I'm not going to pretend to know what bureaucrats are going to do next. I try to pretend that I know what the Fed is going to do next, and that's the extent with which I'll dip my toes into bureaucracy.
Yeah, no, I appreciate that. It's like, and I don't mean this in any sort of. I don't know. Maybe I shouldn't even say it but there's a Twitter Spaces out there that this gentleman has gained a lot of popularity, and he does it regularly. He has thousands upon thousands of people on there all the time. And at first I was very excited for him doing it. And now it's like, this person is like the Jerry Springer of Twitter Spaces because
name names, Kelly. Name names,
Mario
Kelly.
Nawfal. I'll say it.
Yeah,
but I don't want to say that's right or wrong. Everybody, to each business, they have a model to what they're doing. But it's like, it's like, what authority does he have on Andrew Tate? What authority does he have on the debt ceiling? What authority does he have on bomb going off in Ukraine? It's like it's like whatever the hot topic of the day is. But I will say, with that being said, and that's why I'm saying there's not judgment there. It sounds like it's a judgmental topic. It's more like, He's created some sort of network that he has access to people. I think it's because he had some really big early spaces. So he garners a lot of attention there. But I agree with you there on the gamesmanship. But we've sidebarred this enough. This is the longest we've sidebarred non-investment stuff. So everybody watching. So, yeah, sometimes a talk show turns into a talk show. So let's jump back in. Let's jump back in. We're 21 minutes in. We haven't pulled up a single chart other than that thing. Show us some charts. What are you looking at? Are you looking at, because I know you're not, I don't want to call you a Bitcoin maxi because you're not, because you also have other investments in traditional things as well. But are you looking, do you look at all at Ethereum, or are you purely Bitcoin in the crypto ecosystem at the moment?
No, I'm definitely taking a look at Ethereum. And actually, transparently, I have been DCAing into
Pepe coin.
Chainlink and Avalanche, actually, in addition to Bitcoin and Ethereum.
Yeah.
So yeah, I mean, I'm dipping my toes around. I think now is a good time to be accumulating just kind of across the board, not for, any specific, like I have any specific insight on Avalanche or Chainlink. I just think that, I'll just dip my toes in a little bit.
Well,
but
I will say for anybody watching, if you're not familiar with what Chainlink is, I think it's a wonderful play. This is not financial advice, just thinking of it as a project. It's an incredibly connective sort of infrastructure play, because it doesn't only work in the blockchain digital asset ecosystem world. It's a blockchain that actually provides Oracle services to provide unbiased data that's aggregated from multiple sources. And if you think about something like a financial provider that's trying to determine what the price of X, Y, or Z is, and you're trying to make a contract or make a deal with somebody else, or there's global trade and it's happening very quickly, you want to make sure it's exactly the right price. And through Chainlink, it's one of the things. Also sports, also anything with numbers. And then Avalanche, I think, is interesting because it's layer one platform, smart contract platform that's broken up into 3 chains, so you don't ever get congestion on network. It's splitting up the smart contract side from the basically transaction side from the I forget what the third chain is, the EVM, the Ethereum virtual machine, and then you can scale it infinitely just by adding more nodes. So it's and they have a partnership that they've been building on with Amazon, which is why for me I put more than I should in Avalanche, because I'm leaning into the possibility that if Amazon were to go deeper into actually providing more blockchain sort of accessibility or services or payments, I think that Avalanche would probably be at least part of that deal, because they already have a partnership with them. So 2 good picks.
Thanks, man. Let me share my screen on this really quick here. Let me just share my desktop and we'll flip this over. Are you able to see this, Kelly?
Yeah, absolutely. I take my face off.
So we're looking at Bitcoin 1 hour candles, 24 length RSI. So we're looking at the 1-day RSI essentially. And I think this is definitely something that we should be paying attention to. We have a beautiful kind of bullish divergence here where price is making lower lows, but at the same time, the RSI was making higher lows. And what have we seen since then is the price of Bitcoin is making basically since May 12th here. So it's been 11 days of price making higher lows now, right? And this is key. And, the RSI continues to kind of develop in a so-called bullish manner as well. And so I think that, this kind of recent rally that we've seen through here isn't much of a surprise, because, we're also seeing that same exact signal for something like Ethereum. And so I think that's generally good news. I don't want to get too into like the actual price structure that's taking place here on a 1 hour basis and trying to kind of highlight some key levels and things like that. But I think just generally this RSI divergence is, leading to some of the bullish trends that we are seeing. Maybe what I could do as well is just pull up ETH, and then let's get out of the 1 hour and let's look at like the daily or something. Because I just done a post about this. I think it was yesterday or something on Twitter. But look, I mean, this is not bearish price structure by any sense of the imagination, right? What we're seeing here is just kind of classic coming back down. We had a massive breakout, flipped it into support, massive extension, and now we're kind of cooling off. And we're basically just we have a little bit of a downward bias here, 100%, but we've already come back in, retested this range and flipped it into support once again, right? So this is a great sign, in my opinion. I think the one thing that would make me, I'm not, going full steam ahead here in terms of taking risk, because what I'd really like to see is a breakout above that teal range, right? And if so, I think we could get another extension easily back. What's that price level here? This puts us basically at 2020, right? Versus 1851 today. And that's really a drop in the bucket. It's nothing super exciting, right? We're talking about a 7.8% gain. Nonetheless, if Ethereum is doing something of that size and magnitude, it's possible that the altcoin universe is doing quite a bit better. Again, I'm not going to be going full steam in the risk here. And in fact, I'd like to see another retest into this zone once more, right? Because we basically had this wick come in and retest the former resistance range, but I'd really like to see us move a little bit deeper into this full kind of support range as well, right? So we're not quite there yet. And so like I said, I don't want to move substantially and take risk here just to sit through an 8.5%, 9%, 10% decline, still within my kind of valid support zone. And
well,
so
to your point there too, just I want to point out for anybody looking at this chart, while this chart could have a potential bullish outcome, I think what Caleb also is demonstrating right here that, I mean, I promise you, I fall victim of myself still, even though I teach this stuff, and that is falling victim to wanting to front run something because you're not acknowledging how much of a bias you have or how much you want it to go up or down. And so in this case right here, in this chart on Ethereum, this is Ethereum, right? Yeah, in this chart on Ethereum, there's not a clear point of entry that has any sort of confirmative or safe entry until it does break those two sort of levels of resistance and has some sort of either high volume follow through or a small retrace with volume coming in to defend it and then breaking out past that. And there's no need to get an extra 1.5% by front running it and then having it go the opposite direction, rather than just waiting for the chart and the asset and the community to determine the price and give the confirmation that it's happening. It's better to take that 1.5 or 2% that you're waiting for it to break out and give you that confirmation, because over time, the consistency of doing that will reap you so much more benefit than trying to front run everything and driving your capital into the ground.
Yeah, I mean, I totally agree. And, even as I zoomed out here, we could even bring this range back to those November highs, right? So we could even see in November, this was kind of a key resistance range that led us into the whole FTX debacle. And so, I think you kind of hit the nail on the head. There's two trades here, and right now we're in no man's land. So trade number one is we take an entry with a breakout above the teal zone and try to ride this thing back to the year-to-date highs. The second trade is waiting for a decline back into this zone where the risk reward becomes extremely attractive from a trading perspective. Because let's imagine you just take a trade in the perfect middle of this zone, right at 1700. If you take this long, expecting to see another bounce back out of this zone, great, you could do that. And what's your risk management is you cut the position as soon as we fall below this level right here. And so that's a 3.4% stop loss, which in the grand scheme of things is not much at all, especially if you're risking that to gain 25% back to the year-to-date highs. So I think that, coming back into this red level here is actually a great entry for a lot of short-term traders, so long as they manage risk and they're willing to accept a 3.5% loss if we fall below and can't defend this red zone.
No, I completely agree with that wholeheartedly. But I got to press you here, man. You brought up Chainlink and AVAX. Let's look at what you're seeing on the charts on those.
Yeah, let's do it. Let me pull up AVAX first.
And while he's doing that, I'm just you can pull that up. While he's doing that, I just want to say, if you haven't yet, go give Caleb a follow. You can follow him right here at Caleb Franzen. He also has a really great newsletter that he does called Cubic Analytics. I definitely recommend checking that out. He's got a free version of it with just a little bit of a preview, but still has quite a bit of alpha in it. And then, of course, if you want to go further with that, you can hop in there and definitely give him a follow. He puts out a lot of great stuff on his page. And again, if you have not yet, make sure you come over to bitlabacademy.com. Check out all the new stuff we got going on in here. You can up on the top right, there's an enroll now if you want to. If you want to see what we're offering here, come over here to courses. pages, go down to view all. We've got all this stuff in here, and we've got a lot more coming. You don't even realize how this is going to be 15x this in 2 years, and we're just continually building here. So check this out. If you haven't yet, come over to the Academy BitLab site, which is at Academy BitLab. Give us a follow, hit that retweet button, hit that heart button. You get entered to win. We'll be drawing on Friday. So coming back over to you, Mr. CF.
Okay, so you're pressing me on Avalanche. Let's take a look. So I think that there's three kind of main, I mean, this is such a nasty trend here, but let's flip this in a log scale so we could actually get kind of a full understanding of this thing. And so, this has been an absolutely brutal downtrend. But I think that, again, there's kind of three main levels that we could really highlight here. And then you could also perhaps highlight, the kind of lows from last year or in December and early January of this year. But I think one of the things that has led me into this position, which I actually, full transparency, I made my first DCA into this yesterday because we were coming right into this zone right here. And so why is this significant? Well, first of all, it acted as support. I have a photo of you and I down there of our faces, so I can't even see the date. So that was the mid-June lows from 2022, right? So massive pivot, at which point we rallied from basically $13 all the way up to 31, right? So more than a 2x into those mid-August highs, but clearly rode this all the way back down, tried to find support on it once again, but only got into the $20 price range. So from 13 back to 20, and then flipped this massively into resistance. But you can see that year to date, this was a massive breakout level. We rode this all the way back into the 2022 level once again, came all the way back into this. I think this was in March, or what was the exact? Yep, exactly. Those were the March lows. And then we rode it all the way back. So there's like the teal and yellow levels right here, as far as I'm concerned, have basically highlighted some extremely key pivot highs and pivot lows for Avalanche. And so where are we right now? Right in those pivot lows. So I think that, could we fall lower from here? Yes, absolutely. That's a risk I'm essentially willing to take by taking this position. And full transparency, if we get back into the 20s as quick as we have in the past, I'll sell my position. But to be buying in the mid 14s and selling at 21, right? That's a 50% gain. So, if that takes a month to transpire, 2 months to transpire, I'm okay with that. Will I consider selling the position if we fall below this yellow zone? Yeah, I will, 100%. So what's that stop loss for me? That's, 7.6, 7.5%. And so if I'm risking 7.5% to make 45 to 50%, I think that's an appropriate risk reward for me to be taking right now. And so I like this. And, that's one of the reasons why I'm in the trade.
So keep that chart up. I just I'm gonna ask you sort of I try to make sure, and I forget sometimes, I try to make sure to at some point in every show break down things a little bit back to the basics. So looking at this chart, sure. You've got three the yellow, the teal, and the red box zones. If somebody was looking at a chart for the first time, for instance, we had two gentlemen walk into the HIT network yesterday who literally just saw the sign, and they've been seeing the sign in front of the building for the last couple of weeks, and they're like, and these are two different individuals. They came in about 10 minutes apart from each other. They're like, yeah, I've been seeing this thing about crypto. I want to know, I just like to learn about crypto. And I said, so we started talking, and I thought I was in the conversation. I thought I was breaking things down to beginner friendly levels. And I said something about candles, and he's like, what's a candle? So, and like we have to remember that, as much as we're breaking things down in what we think is a digestible manner, and even for any of you out there that are way further past this and Fibonacci's and we also have to be patient and make sure that we throw things back to the beginners, even in chat. If you all see somebody ask questions in any chat, it pays to help other people out, because as you said, a rising tide raises all ships, and the easiest way to rise a tide is to help people understand what's going on, because the more people that are trading with some sort of knowledge base rooted in some fundamentals, the better they're going to do, and if the better they do, the more their friends and family are going to want to participate as well. So looking at these three box zones, if you had just pulled up this chart and you didn't have these on, what is your strategy for determining what these zones are for any of the beginners out there? If somebody's trying to figure out what levels should I be paying attention to?
So, it's always easy with hindsight, right? And to be able to look at this chart now as I have it laid out and be like, oh yeah, those are key levels. And, it's taken me almost probably 9 years at this point doing technical analysis and looking at price structure. I'm an absolute chart junkie to be able to pull up pretty much any chart and try to be able to identify some key zones. And I think one of the things that people kind of, like one of the misunderstandings of technical analysis is that, oh, these levels are going to work every single time. And this is a proven support zone in the past, therefore it will act as support again in the future. And I don't believe that's necessarily the case. What I'm trying to do here is I'm trying to highlight key pivot levels. So where have we seen major highs? Where have we seen major lows that therefore go on to correspond to other lows and highs that don't necessarily need to be major lows and highs, but where do we see a lot of kind of pivots, right? And so I think that's why for me, I've been so focused, at least with Avalanche, on this yellow range, because those June lows, I mean, this was a massive, massive decline, right? Even from the March or April 2022 highs, to get down into this range was an 86% decline. This was a massive, massive decline. And so for us to go down 86%, and then from that level magically to rally 123%, that's pretty interesting to me with hindsight, right? And I don't think anyone could have called this as being the bottom, right? But now that we're here, you know, even 6 months later after this occurred, we knew that this was a proven level. And so when we came back into it and retested it again in, what was this, Q4 of 2022, it's not necessarily surprising to see bulls come back and defend against this major pivot level, right? And so I think for me, that's where this becomes really, really important. I've also kind of outlined this red level here. There's not a significant amount of action that took place there. You could kind of see here it tried to do something, here it tried to do something, but not really. It might even just be more appropriate to bring this here, right? The same way that we have this low, we had this major high right here, right? And so I think that one day we could return back into this level, let's just call it 30. But before we do that, we're probably going to need to get above this teal zone first, right? And why is this teal zone important? Again, these were major support levels before the major bottom in June. Major resistance, resistance, flipped it into support, flipped it into support, tried to act as support. Oops, nope, failed. Resistance, 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 resistance. Like it's just resistance so many times, right? So we could see clearly that major peaks occurred within this teal zone, right? And so for me, that's kind of a magnet for price. These major pivot levels are a magnet for price. One guy I follow, his name is JC Peretz. He goes by All-Star Charts on Twitter. He talks about revisiting the scene of the crime. Price likes to revisit the scene of the crime.
Yeah, price memory.
Exactly. It's all price memory. So when we had this massive breakout above the former lows here, which acted as support 2 more times and resistance several times in the fourth quarter, when we got this breakout in January, is it really surprising that we came back and retested it again in March? Not really, because this is the scene of the crime. There's been all this activity that's taken place here. And so sure enough, where did we go? We went to another scene of the crime, right? We went to another crime scene way up here in the teal zone. And now where have we gone since then? Back to the scene of the crime, right? We're back here once again. So like I said, when I first brought this chart up, I don't know for certain that price is going to rebound here and behave exactly as it has in the past. All I know is that I should be paying attention, because when we failed to use this level of support, that was back here in basically November, October of last year, right? And so when we fell below this level in last November, how much did we fall, right? We fell as much as 22%. That's a massive drawdown, right? So I don't necessarily want to be involved in the trade to sit through a 22% decline if I can cut my loss at 7.5%, as we outlined earlier, right? So this is why I'm focused so keenly with respect to Avalanche on this yellow level.
And so everybody looking at these, one of the things I like about these boxes, and you all notice from the charts that I do, and also if you've seen Caleb's stuff in the past, he also does, rather than using NEMA or NSMA, he'll do these basically moving average clouds using an EMA and an SMA. And what I like about that in correlation or in relationship to these regions is sometimes people see a pivot point and they put a fixed line and they think this is the dollar value at which I need to be looking for the reversal or the support. In reality, there's no line on a chart that will ever be 100%. This is a level that exactly at this point we need to watch, even within $10. Typically, you're going to see more often than not price action regions. And the reason that is because when you're coming into a known reason because the previous price action has reversed or bounced at those levels, you have different players in the space that are more conservative and more aggressive, right? So there's a variation on the level that you're looking at where people are front running, taking profits, getting into it, or front running, taking entries, coming down to it, and some people waiting to the very last moment. So you have this region where this is why you also see on price action. I think I can annotate your chart. Let me go ahead and leave your chart as it is. Even like sure. you see like right here, this is starting to, the momentum starts to round a bit right here. The momentum starting to round. This is exactly that. This is a lot of buyers, okay? Buyers coming in. And then what happens is you have the price action move up, and whether or not it's from liquidation events, short squeeze, long squeeze, it doesn't matter what our explanation of it is. It matters what price is doing. And as we're coming into this, when you see the rounding, it's because some people are taking profits while you have to remember the majority of us and the majority of people in the market start being held hostage by their emotions. They're not trading on fundamental data. They're trading on, this is moving up. I got to catch it. I got to catch it before. And then it just reverses the opposite direction. And so if you are aware of key levels and you have some sort of strategy in place, you're going to do far better than you have in the past one. And you're going to do far better than 90% of the people that are trading in the market, because most people get held hostage by their hope or fear.
Yeah. And Kelly, just one more thing on that, it's like, even for me, sometimes when I use my trend lines, I'm not going to just use a specific trend line. So if we just focus back on that Ethereum chart that I was sharing earlier, right? Like, look at this resistance trend. Like, let's just get rid of the support one here, but like, look at this resistance trend line here, right? I've basically created two parallel ones. And why have I done this? I went from the high wick to the high wick on the rejection. And then I duplicated that. And I basically tagged it to the year-to-date high close on a daily basis. Right? So I'm basically pivoting it to this daily high close right here. But that also happened to line up almost perfectly with the other high wick, right? So I was like, oh, that's pretty interesting. And sure enough, where did we see resistance here in terms of the daily close, right? It was right on that second kind of lower bound of that resistance range. And so once again, I think, implementing certain strategies like this within your overall technical analysis is super important. Because I think now going forward, instead of just focusing on this level right here, it's possible we just get rejected on this first one here, right? So I think even for me, that's why I always like to give myself some margin of error, because you're right, no individual level or slope is perfect. And so kind of giving yourself a cushion or that margin of error is super, super important.
Man, we're talking some good alpha today. I really appreciate this. So we've looked at Bitcoin. Wait, did we look at Bitcoin yet? Did we start with Ethereum?
Yeah, we did. I'd love to look at just one thing with Bitcoin.
Yeah, will you zoom out on this? Something I meant to bring up yesterday on stream, and I forgot to bring it up. And I cannot give credit because I'm not the one that saw this first. It was somebody else I saw on Twitter posted this. If you zoom out, because I can't see the upper left hand. Go back to Bitcoin.
Sure.
If you zoom, okay. So looking at this right here, where's my? Do I have my line? Oh, here we go.
How far back do you want to go, Kelly?
No, that's perfect. Draw. Here we go. So looking at this, kind of looks like a bit of a neckline, and it's a very kind of ugly, but there's almost shaping up to be in some
like a cup and handle, yeah.
Some kind of large macro cup and handle could be forming here. But what people need to realize is this doesn't mean that this is a cup and handle and it's going to break out from here. These handles on a cup and handle can be valid all the way down to get it. I mean, dropping all the way into about the 0.5 mark. I like to have it above that, but about the 0.5 mark on the fib. So this really this could come all the way down into that 25K region that everybody's calling for. My only criticism of the 25K region, and I'm pointing it out as well because it's on the chart. I feel like we need to, but is the fact that so many people are seeing that level. I do think there is a possibility that the market doesn't do what everybody wants it to do. So while we are getting a little bit of a pump today, I'm cautious on the pump. While I am bullish, I do think there's a potentiality that we can still go lower, but that's also contentious because so many people are thinking we're going to go lower. That's typically when things go the opposite direction. So I'm just being very, very cautious with trades right now.
No, you're spot on, Killian. I was in Split when I made this video on YouTube, but it was some point back around this area here. And I talked about how I thought at the time, everyone was only talking about to the moon or price crashing. And I was like, you know what? I think that there's another scenario here where price does something, significantly different than that and just kind of bounces between these two support and resistance ranges, right? And maybe it's a little bit more choppy or whatever the case is. But I think that, we're essentially, trying to see some of that today, And so again, why are we focused on these levels? I know I just drew this right now, but this is a level I've been focusing on and talking about for some time. And so again, this was the former support, flipped it into resistance several times. It was year-to-date resistance. We've broken above it. We haven't seen a full retest of that zone yet. And so again, yeah, that would get us right to 25.4K at the top of that range and 24.2K at the lower bound of that range. So yeah, could we, I do think we'll, again, revisit the scene of the crime here, which we haven't yet had for Bitcoin coming back into this range. And, that just so happens to align perfectly with the 200-week exponential moving average. It just happens to align perfectly with the short-term holder realized price. So in addition to the actual price structure of support and resistance, we're even able to get kind of confluence with the more statistical or on-chain data points that are also kind of aligning perfectly within that same range. And so I do, my base case is that we get back down into this range, but I don't know what the path is to get there, right? So I know I just outlined this path, but what if we get something, isn't there like a more of a drawing tool? Let's use this brush here, right? Like what if we get something else that comes back into this, we come back in here, like it could just be chop fest through this range, right? Like I really don't know. So could we go perfectly from right here, 27.3K back to the year-to-date highs at 31,000? Yeah, we could. But even still, I might be kind of pounding the table. Hey, we might need to revisit the scene of the crime here and retest the 25,000 to 26,000 range. So we'll see if and when we get there. I'm not married to any narrative. As always, I'll stay flexible, but I'm going to let the charts kind of guide my bias as much as possible.
So you brought up, I'm curious what you're looking at. You brought up, and I absolutely love on-chain data. Is there any key charts that you're kind of utilizing right now that's giving any sort of different sort of or special sort of look at what's going on that's helping inform your analysis?
Not so much, Kelly. I'm really a TA guy at heart. So for me, that's where I kind of derive a lot of the alpha that I try to generate is from a technical analysis side of things. With respect to on-chain data, I love to use it as kind of proof positive of kind of the fundamentals of the Bitcoin monetary network, not the price of the asset itself. And so for me, looking at, different wallet addresses with, a certain minimum amount of Bitcoin is very interesting for me. Long-term holder supply, things of that nature. But definitely, I would say that the two kind of key levels that I look at for actual kind of alpha in terms of price implications is the short-term holder and long-term holder realized price. Aside from that, I'm just focused on the TA side.
No, I totally understand that. And see, for everybody out there, you see, Caleb and I both have been in the space for quite a long time, and we have different strategies in terms of how we arrive to our inclusions, but we both have made it. We both make a successful living in trading and investing, and we arrive at it with two different paths. And I want to just let everybody know out there, the point of what I think this stream is for me and sharing it is to provide a broad array of tools and strategies that each one of you need to figure out, one, which ones you care about, because if you don't care about it, you're not going to master it. Two, which ones really you feel like you can master and you grasp, and you're going to change. They're going to change over time as your knowledge base grows. Sometimes you're going to add too many tools. I know, Caleb, I mean, we've all done it. You find out about a tool that you see somebody else doing and you think it's awesome, and it just clouds your ability to make a decision because it becomes overwhelming sometimes. So, I would say that a good starting point for anybody in the space, or if you're trying to figure out what area you should master. And I'm curious what your answer on this is, Caleb. My answer on it would be, start with mastering or attempting to master no charts, no lines, no indicators, looking at price action and volume on a chart. If you can understand price action and volume and getting some sort of insight and some sort of signal as to what's going on from that, and then you can add to that toolbox with then, beyond just looking at the price action, then you can add your horizontal, price regions or chart formations. And then from there, then add indicators. That's sort of my sort of strategy. Even now, when I can look at a chart, we call it price vision or chart vision. Once you've been in the space for a while, I could pull up a chart without having any lines on it, and I can see the levels. And then I throw the levels on the chart. So when I come back to it quickly, it's immediately identifiable. But if you're looking at a chart and you have absolutely no idea what's going on, 7 indicators, 17 lines, and an orange box isn't going to help you.
That's right.
What about you? What's your price list when you come to a new chart?
Yeah, it's just looking at price structure pretty much. I wanted to share this. So this is Thinkorswim, which is TD Ameritrade's charting software. And this is what I've been using since 2014 or 15 when I got into doing technical analysis. And I just want to show here, I can't zoom in on this or expand this window, unfortunately, but look at all of the different studies that they have available on this platform. It's just obscene, right? And like, you could just double click and add any of these. I promise you, I have experimented with literally every single one of these, right? Trying to find ways to implement them, pairing it with another one, doing all of this stuff, because when I first kind of stumbled across technical analysis, I was so interested in just exposing myself to all the different strategies, all the different ideas, all the different indicators, pairing them together, what works on this time frame versus that time frame. And I can promise you, simplicity really does pay off, right? So even for me, I really just kind of rely on a couple key things, and that really has to do with exponential moving averages and the Williams percent R oscillator. I'll occasionally look at the RSI, but even still, the majority of like my actual trading choices or actions is usually dependent on price structure itself. And then if I could sprinkle on other indicators to reaffirm the bias that I'm seeing from the levels in the chart itself, that's a cherry on top, right? But it's never the causal thing in and of itself. But I would definitely echo some of the sentiment that you said is just, I mean, look, when I first started doing TA, I was looking at FX markets, and because they were open pretty much 24/7, Monday through Friday, and then they open on Sunday. And so for me, that was a way for me to just always have an ability to look at price structure all the time. And this was before I was interested in crypto and all that stuff, right? So I wasn't, doing chart software for crypto at the time. And so for me, I was looking at, euro versus dollar versus yen, right? Like all of these different relationships, because it was just like, hey, this market is open 24/7, and I can look at new price structure all the time on a 1-hour candle, right? So that's kind of how I got started, practicing my TA, but it all transfers over, whether you're looking at crypto, whether you're looking at stocks, whether you're looking at bonds, whether you're looking at ETFs, you can do technical analysis on any chart.
Yeah, no, absolutely. And, I think I hope everybody gleans from this is that there's no looking at a chart and just knowing. There's no buying an indicator and having the best signal. There's no even watching this channel and knowing exactly what to do. The key to success in anything, in any market, or anything really, it's about understanding patterns. It's about knowing that no pattern is 100%, but then also what are the ingredients around that pattern that can help me set up my idea, my analysis for stacking probabilities in my favor. And then within that, stacking those probabilities in our favor, then even though we might think even something has, I'll tell you right now, if you think something has 100% certainty, that's the number one time you should have the most capital risk management you should ever have. Because every time I've been certain, I've been wrong. Once you're open to knowing that, as much as people hate to hear it, price action could go either way. It could go up, it could go down, it could go sideways. And so in reality, I mean, and I've told this story before, but I traded up to about $100,000 spot trade from about $2,000 several years ago. And I felt like I was on top of the world. I was such a good trader, man. What happened was first I lost my humility. So when you lose your humility, you lose capital protections because you're sure of yourself. And the second thing was, I was like, you know what? I'm just going to be rich next week. I'm going to leverage trade this. And I lost about $80,000, $78,000 in about 3 days because I didn't have my humility. And I didn't also realize when I changed my strategy, AKA going from spot to leverage, that I didn't also adjust my capital management with that as well. And the two trades that I lost all the money on, both of those trades went in the exact direction I thought they were going to go. So how did I lose money? Well, when you're trading on leverage, there's a lot of smart investors out there. There's a lot of big money. There's a lot of whether they're hunting your liquidation zones or not is irrelevant. The price action could go exactly the direction you saw a pattern and a signal that called for it. But price action tends to do exactly what it wants to do, and it gravitates towards where there's the most liquidity. And once that liquidity is eaten up, then it will resolve into the direction that that you thought it was going to go. So I just want to caution everybody on staying humble, keeping your strategy, and you don't need to. If you do leverage trade, I beg you, do it something very respectable, like under 5x, really. And secondly, don't do it until you've done 1,000 spot trades and you understand the process of trading in general. I really recommend that leverage trading not be for people that are just trying to get rich, because trying to get rich allows you to donate to other people that already have money. That's all it is.
One other thing on that, Kelly, is I genuinely believe in crypto, you don't need to use leverage to make significant gains, because look, I'm a Bitcoin and Ethereum guy, but we were just going over my trade in Avalanche, right? So why am I doing that? Because I basically view Avalanche as leveraged Ethereum, which in a lot of ways is leveraged Bitcoin, right? So, and all I'm doing is trading spot. I don't need to go out and buy, 3x, 5x leverage calls on Avalanche, right? It's already Bitcoin on steroids in terms of the price movements that it makes, both to the upside and to the downside. And I recognize that 100%. And so it's like, look, I have a bullish bias on Bitcoin right now. I also have a bullish bias on Ethereum right now. I see a pretty damn good looking chart in Avalanche. I'm going to take a swing. I'm going to control my risk. I'm more than happy to take a 7.5% loss if it means the opportunity to make 25 or 26%. So exactly as you pointed out, you don't need leverage. It just exposes you to a whole new set of risks and the whole 9 yards. This is also why I don't trade options.
Yeah, no, I completely agree there. And Will Clemente said the same thing. He said he's not that he wasn't necessarily into altcoins, but Bitcoin in a function is almost like a high beta altcoin to the traditional asset space, and altcoins are like a high beta asset to Bitcoin if you're doing it to accumulate more Bitcoin. If you're doing it just to get rich in Pepe coin, well, I wish you well, and I'm not going to hate on anybody for their asset choices, but I hope it's less than a 1% allocation of your portfolio. And when you are in the green, somebody's asking me yesterday about meme coins and why not just put a lot of money in meme coins? Like it was, and I don't mean to judge, but it was such a silly question in my head. I was like, is he punking me asking this question? Is he really serious asking me this question? And my answer to it was, you have Shiba Inu, Dogecoin at this point, because it has such a high market cap, it is a little different. But even with Dogecoin, Pepe, Shiba, whatever, Inu, Folky, Mocha, doesn't matter. You can make money, but the 99% of the people that are investing in those assets, they heard of somebody else getting rich, and they didn't realize that, one, they bought before you had even heard about it, and two, they either had a huge percentage, like basically they had a limit order at some dream level that just automatically got triggered when it got up there, and they were able to get out, or they happened to be sitting on their computer within a 2-hour window of that spike happening, and they were able to get out. Because what people do is they get in, and then the price goes up, and then they hear about it the next day, and they come back, and the price is right back where they bought it at, or actually below their price point, and they go like, how does this work? Well, I mean, trading is, to trade is something different than investing. Even taking position trades is more of an investment strategy than, trying to day trade, especially a very low beta asset like meme coins, that you have to be locked in on that to execute it in any way to be meaningful for your portfolio.
Yeah.
So
totally agree, Kelly.
Caleb, it's coming up on an hour. I don't know how much time you have. Do you have any other things you wanted to share before we let you go? Any things you wanted to call out, or any other hidden gems you want to talk about, or anything?
Man, I wish I did. The whole market right now has been extremely boring in my opinion. And in fact, a lot of the action has really been in stocks, which is my kind of bread and butter. So I've been happy in that area. But I only had an hour anyways, Kelly, so this works out perfectly. It was an absolute pleasure to come on. We'll have to do this again next week and catch up again, and hopefully have some super exciting things to share with everybody once again.
No, absolutely. I really appreciate you coming on, Caleb. Everybody else, we're going to continue on. I hope you have a wonderful. Where are you at right now? Our traveling correspondent here. Where are you at?
I'm still in Budapest. I've been here since the beginning of the month, and I'm going to Istanbul on June 1st. And so I'll be out in Turkey for about 3 months before I make my way back to the EU. So,
you know, when a Caucasian male has been traveling for a good period of time from the U.S., it's when they start saying the names of the places as they're supposed to be said, rather than I'm going to Budapest and I'm going to Budapest and Istanbul. Yeah, you're leaning into the culture. I love it. I appreciate you. Have a safe time. Be well. I look forward to having you back on here next week, my man.
Peace, bro. Talk soon.
Adios, my friend. Now, everybody else, I hope you like that. We're going to continue on. We're going to do a bunch of TA here. I saw Tom was in chat. I tried to pull his leg a little bit. We got to hang out kind of in and around each other. Actually, we didn't hang out in each other. We hang out around each other at Bitcoin Miami. We didn't get much of a time to connect, but I just pinged him. If you wanted to come on and do some TA with me, that'd be awesome. If not, we'll figure out another time, because we got another 30 minutes or so. We're going to do a bunch of TA on just what's going on in the market. I think we're going to do it on some Beanie Babies, some Teletubbies, and all the good things. Now we're going to be doing some good assets here. But before we move on, I do want to just say that make sure you go and follow Caleb here at Caleb Franzen right here. You can follow him. He's got some great stuff there. And then, of course, if you have not yet, where is it at? If you haven't yet, make sure you come over to my page, at Kelly Kellam, Kelly Kellam. And then, of course, come right here to the, that's not it, the BitLab Academy tweet from today. Hit that follow button, hit that retweet, hit that like button. We'll be drawing this Friday for some giveaways. This is how you enter, supporting what's going on here in the channel. Now, shout out to everybody that's here. Shout out to, I didn't do all the call outs, so I'll do it right now. Shout out to, I saw my boy Elliot Locke in the house. He's already back in South Carolina. Brad Guidell, who was his friendly chauffeur to get him back there. He said he's on his way back to Atlanta now. Brian D, Alexander G, Gia S, Sawtooth Hiker, Crimson Caravan Company, Blazing 2 Jays. Every time I read that name, it makes me think of the Bob Marley song. I've sang it here once before. I'll save that for another time. Karen Swigart Harris, B Team Crypto, Elliot Locke. Who else we got in here? We got everybody in the house today. Did I say GS? Granny's Garden. Everybody. Alex Green, my main guy. All right, now, so let's go ahead and get this going. Let's jump back into what's going on in the charts. So I pointed this out yesterday. Let's go ahead and bring this up, large and in charge. We are coming up into this zone right here that we've been talking about for some time now, this 48%. We are in this bit of the diamond sort of formation right here. Will this go up or will this go down? Who knows? Maybe this even goes sideways and everything tracks perfectly together. Wouldn't that be nice? I would actually like this to go down, because I've got... I'm a little heavily exposed right now to the altcoins, and I'd like to take some profits from those and reallocate it back into Bitcoin, but I've got the level set that I want to do that at. So I'm holding off. I'm not doing it. This is looking very somewhat... On the signals, it's looking like it is indicating it may be coming down, but this is such a soft signal on both of them that with a contradictory blue wave here on the significant movement, which is indicating that the momentum indicators are fully reset and undervalued. So we're just going to have to keep an eye on this. Now, let's go ahead. We're not going to do a lot of macro today. We're going to jump right into the charts. So looking at where we're at right here, looking at Bitcoin, I'm on the 12-hour BitGet chart, Bitcoin spot. we can see with the mesopic vision, which there's 3 different versions of the mesopic vision, which is basically this very upgraded PVR that also has the heat maps on it to show you where you're having higher levels of volume, as well as these order blocks that show you sort of volume anomalies at certain sort of price levels in the order books that price action tends to be attracted to come back to. We can see it's happened right here. It's acted as basically as resistance. It's also acted as support. So as we're right here, and I want you to know these lines, if I double click on this, let's go ahead and do this at 150. I have them very tight so it doesn't cover the whole screen, but we can see right here, we're coming up into a level, even on Bitcoin, if we were to continue trickling up, we've got this level of previous support right here that we keep sort of finding our way up to. And if we trickle up to this region, we'd also be coming into this order block that we have right here on Bitcoin, which is essentially right at 27.8 up to 28.1 almost. And so this gives us not only this block, but we also have a block right above it. So we've got a bit of resistance sitting right overhead from the order block. Order volume anomaly right here that we're seeing on the mesopic vision. Now, if we actually pull up, pull up market intelligence. Now let's pull up our other indicators. Okay, looking right here on the 12-hour, could we have called this sort of move to the upside? Well, let's start with what I was talking about earlier. The first things first. Price action. If we turned off all the other indicators, okay, and we look just at price action, okay, we do have this level of support. This came down into this level of support. But we can see just on the shape of the price action, the candlesticks, we have this bearish engulfing candle, meaning this candle is opens and closes larger than the previous bull candle. So this means this is a full shift back to bearish momentum. However, this is very short-lived because the very next candle is a smaller candle, meaning there's not as much velocity, there's not as much momentum in this price candle moving to the downside. As we can see right here, it's almost like a fat spinning top, and then it's almost like a spinning top hammer candle. It's more of a hammer candle here, and then we get almost a doji. But the point here, if we look at these candles, they're making this motion right here, rounding. So this was already indicating that momentum was losing velocity to the downside coming into this level. And it's already starting to shift. So just from the price action candles, we could have seen the indication that something was coming. It's kind of like if you go in the ER, you go to your doctor, they check your pulse. You might not feel bad, but they might go, we got to check you in right now because they can sense there's like an anomaly in your heartbeat, or they can feel your blood pressure dropping, or they see your pupils dilating. The same thing happens when you're looking at price action on a chart. This should be your first indication of stuff. And then we can turn on, for instance, the market intelligence. On this, we don't have any bullish divergence right here. But if we zoom out right here, we can see these candles are green. The reason these candles are green, remember, is because if we delete this, you'll see those would just be, this is bearish, bearish, bullish, bullish. If we turn on the relative extrema, we can see that these are green because this is basically unhealthy movement to the downside. There's stronger bullish pressure underneath these candles, and then we marry that with our understanding that these candlesticks are also rounding and shifting this momentum. So the shifting of the momentum, although they were coming down, showing that there's more bullish underlying pressure than is actually being represented in price action moving up. And here is the kicker. Then we get not only one, then we get bullish divergence on the volume, hidden volume right here. So this is rounding. We got bullish divergence. We also see underlying bullish pressure, and we get the blue wave on significant movement. This would have been basically the full call without having. We didn't even need the bullish divergences here on the market intelligence. But remember, currently we're looking at the 12-hour chart. So if we're looking at the 12-hour chart, let's go ahead and put option V. We're going to put a line right here. Now let's divide this down. Let's get higher resolution on the chart. Let's come down to this point. Now look at this. On the 4-hour chart, this is that same movement right here. This is that exact candle we were talking about where there was no bullish divergence here. We have the relative extreme of flashing green giving us an indication we need to start looking for a potential reversal. Now, this is going to be very interesting because we have a lot of bearish divergence on the volume, but this is coming into a known zone that's been bouncing here. It's acting as support. And then we get a stochastic bullish divergence right here, but it's a bit neutral on this sort of zone. So let's go down a little bit further. And we can see this came in. This is flagging green all the way down. And we come into the zone. We had some bullish divergence prior to this, showing that there was some interest as price was falling. But then we get the blue wave right here. So this market is just being as choppy as it can be right now. So as this is looking right here, we can see, yeah, this range right here, as I told you earlier on the stream, I'm not particularly looking at any particular trades in this in any given moment. I am looking right now as a net buyer, waiting for opportunities because I have positions, some longer term positions, but I also have dry capital on the side. I am waiting for another attempt to the downside or a concerted effort, meaning there's like the buying pressure and volume that agrees when this starts moving to the upside and comes in here. If this bounces, gets support, and then if it breaks this zone anywhere in this region, then I'll be a net buyer again, and I'll ride this back up, potentially looking for a possibility to take profits once we try to test this area again. If we come up to this area and there's some strength, I may take a small portion of profits and then let this, move up to the 32 to 36, and then on a pullback, then add to that position. But right now, because things feel so uncertain and they feel so wishy-washy and choppy, it makes me be more patient for the better opportunity below, or patient for a strong opportunity with volume and agreement in the chart and the buying pressures with this moving to the upside. So that's what I'm looking at. I'm looking for all the greedy bears to get liquidated and start their new jobs at McDonald's. You know what? I hear that. I don't want anybody to lose. We all will lose at some point. And for me, when I lost that $78,000, whatever it was, and it's not like I had millions in the bank at that time. Back then, that was basically the entire amount of crypto I had. I was an idiot. I was trading my whole portfolio. And it's the best thing I ever learned. It was my crypto tuition. It made me understand capital management. It made me understand diversification. It made me understand having a long-term hold folder with a smaller allocated trading folder, meaning say you have $10,000. Well, you shouldn't be trading on exchange with $10,000. If you have $10,000, this is not financial advice. This is just strategy discussion. It's something like having between $700 and $2,000. The higher the number, the more aggressive you are, the less risk protection you have. But it's $1,500, $1,000 to $1,500 range. And you trade with that, and you split 30%, 30%, 30%. 30% of every profit you take goes in your long-term hold folder. 30% of your money stays in your basically you're building your trading reserves. So it's building alongside your long-term hold folder. And then 30%, if and when you need it, you could take out for, a trip for your family, a trip for your wife, birthday gifts, travel. So then you're funding yourself without ever having to take away from your long-term hold portfolio or your trading portfolio. So let's continue on here. Let's look at, there's something I wanted to look at earlier. We already looked at Avalanche. Let's look at Cardano. This chart, you know what we're going to do? This chart can be from me. What we're going to do, we're going to come over here. We're going to come to a naked chart, basically nearly naked. So let's go ahead and look at what's going on here. Okay, so we got a zone here. We're going to do a zone right about here. We're actually going to do a box here. Why am I going to do a box? Because there's some level. What's going on? There's some levels here that if I did a line, it's not really going to count for the levels that I'm trying to hit. And we can see all the way out here. Yeah, it's just a little higher. Now we're going to make this. That's not what I wanted to do. Come on. We're gonna make this gold. We're gonna make it, yeah, just so that says, yeah. Let's go red actually. There we go. And so what we want to do here, where am I looking at? There we go. So we could see here, we've got a bit of a, looks like we have a ascending triangle here, which is, to put it in perspective, these, when these are angled to the upside, these and have a flat bottom of resistance, these have a higher potentiality of breaking to the upside. Doesn't mean they have to. In fact, a lot of times in crypto, what we see is price action actually coming up, faking to the downside, getting people committed short, coming in and then breaking out and resolving to the upside. It all depends on where the certainty of the direction in the market is. And when we have a strong, determined bull market, it would make sense for this to really classify this as probably just going to be breaking out. As it stands right now, because everything is such on a razor's edge, it feels like, I'm looking at, we can also do a line right, where is it, right here? Yeah. So the reason I put this line here is because we got this key bounce. We come over here, this bounced right in this region, this bounced right in this region. If this does get lost, this is not going to worry me until this breaks this level right here. This line right here, because this would be an understandable place to trap liquidity to come back up in and then break out in the way that we are hoping it would. Now, if this does bounce here, it looks like we're getting a bit of a W formation right here. So it is looking like it's attempting to be bullish, but we're on the 4-hour time frame. I have all these lights in my eyes. I can't see a darn thing. But my concern here is we're not able to get above. We're not able to get above this sort of line right here so far. This is it's getting weak coming into the zone. The relative extrema, we can see, hold on. Relative extrema is weak coming into the zone. This is why these are pink. Crypto tuition 40K to 1.4 million to 0 last run. Bernie, is that what happened with you? I'm so sorry to hear that, my friend. Well, you're still here. You're still around. Let's get it back. That's what this is all about. You know, there's one of the guys I was talking with yesterday. He's starting with a $15 investment. And you know what? People have started from less. And the only way we really lose is if we give up. And it's not crypto that's, you know, we always have to take more responsibility than we want to, or we think we really deserve to. We have the ability to get back up and get on the horse. And if things aren't working, or if an exchange went insolvent, or if all those can be taken responsibility of ourselves. We can always figure out how we can protect our capital. We don't need to trade all of it. We don't need to have it all on exchange. We don't need to have it all in one coin. We don't need it, you know, we can be better. We can grow. We're going to grow together. So shout out to Bernie. Thank you for the super chat. Thank you for being here as well with BitLab Academy. We are going to make it happen. Wibbly wobbly, timey-wimey. We are very wibbly wobbly. Yes, we are. And we can see this zone right here. I was talking about this sort of W formation. If we got it much tighter, you'll see what I mean. W formation here. If we're able to break back above this, then I do think we're going to be attempting to come back up into this zone. As it stands right now, let's look on the daily. So we had the blue wave, meaning undervalued, right, coming into this level. But now, as soon as we came to this level, this went back to neutral, which isn't a good or a bad thing. It's neutral. It means we don't have that strong undervalued support anymore. But we do, look at this, relative extrema, a lot of underlying, look at this, underlying bullish pressure. This is green. Underlying bearish pressure. This is just, it's almost like right here, it's almost like we trapped ourselves into another ascending triangle right here. Things are feeling so uncertain right now. I really do believe, and I mean this, everybody, I really feel like the market is coiling up right now. And I do think, I think it was yesterday, the title of the video was about volatility in the space. Volatility. I do think that there's going to be a pretty tight move that's going to be happening here coming in towards the end of May. You know, I would say, but in the next 11 days, I think we're going to have some fireworks in the space. Will it be up or will it be down? Let me know if you think it's going to be up. Throw up in chat. If you think it's going to be down, just say, you know, down in chat. I'm curious what you all think. The truth is, it's probably going to be up and down. No, but I do think we're cooling up. I do think there's a lot of supply-demand dynamics happening right now, where there's a lot of illiquid supply happening in the market. Where the record levels of illiquid supply over the last 5 years, while also having a reduction in supply that sort of transitioned last halving. So it's exemplifying without even increasing demand, the illiquid supply and the lack of available new supply that's around. We are in a basically bullish divergence of supply and demand dynamics right now. So I do think some big fireworks are going to be coming here relatively soon. So Crypto 420, what's up, man? It's good meeting you at the event, the Bitcoin Miami. Now looking here, what was I going to look at? Let's look at some stuff we haven't looked at in a while. Adam, look at that. Very interesting sort of chart here because of these resistance, support. This does look like it's sort of coiling up. This is coiling up to the downside. I'd be waiting for this to have some sort of breakout to the upside, maybe a potential small washout to the downside. But my only concern here is that we do have a bit of these tops are sort of rounding down. So although this formation looks a bit bullish, because this is rounding, if the market tends to fall, I'd be looking at potentially coming down to this level here, 855. If this does lose this level, potential washout down to 9.5, and if we lose that, down to 8.55. If we lose this, we could be going much lower, down in the 6s. If we are able to break out of this, I do think it's going to be a weak breakout. I do think it's going to be something like this, and then potentially work its way up. This is with Adam on the 1 day. If we kind of zoom this in on the 4 hour, zoom, baby. Okay. Yeah, so even with this bounce, see these pink relative extrema? When these are out to the upside, this means there's a lot of bearish pressure. This is barely able to get up in this zone. I do think this is going to come down and test this zone. I do think it's going to come down to the 1023 to 1018 sort of region. But man, things are just looking there's nothing that's looking exciting. Come on, you can do it. Let's go ahead. There we go. So yeah, looking weak coming into the zone. We have 4 bearish divergences as well. This was blue, meaning undervalued, and it went right into bearish, and it's also coming into the EMA ribbon, getting some rejection. Coming down to, let's actually go out of this chart. I have some other ones already pulled up. We saw AVAX. Let's look at XRP. XRP, zoom out of this a little bit. Let's go to the daily. Let's get some context here. So we got 3 bearish divergences. That's RSI, on balance volume, and money flow. MM would be momentum. So M is money flow. So of course, we're getting bearish divergences at a known level of resistance. Look at this relative extrema way out to the upside, way out to the upside, showing a lot of lack of health for the bulls. Lack of support coming into this is essentially what this is, and essentially bearish pressure. So this is coming into this zone right here, these lines that we drew a while ago, bearish divergences. Now this is looking a little bit like a bull flag, but I would be concerned with this because this would be a bull flag with a lot of lack of support. So I'm not saying it's not going to happen. But even if this were to break out, I'd be watching for a rejection here at 48.19. Now let's come down to the 4 hour. Let's go to the 2 hour actually. Coming to the 2 hour, we can see just choppiness. We're coming into a little bit of a zone here, but this is looking at like a weak, where's my lines? This is looking like a bit of a weak, almost like a channel. I wanted it to be, it kind of could be a bit of a rising wedge here. Yeah, this is looking weak, but I will say, looking down here at the relative extrema, this aggregate momentum wave outside of these, meaning the clouded shaded area, we are getting an increase here on the momentum wave coming to the upside, but it's being met with very bearish resistance each time. I do think that this, if the market doesn't resolve to the upside, I do think that this, if the market doesn't resolve to the upside, or we don't get some sort of massive good news for XRP, which kind of has been happening somewhat regularly lately, like positive news stories, there is that potential that this comes out. But I would be looking again at this 48 cent level, 48.10. This is looking like it's trying to make its way up here to likely roll over and test one of these levels again, 45 or the 45 cent region. Now I'm backing out of this. Let's kind of go over to, what's the Dixie looking like? See Dixie, look at this, a little bit of a cup. I won't call that a cup and handle, but round. And then this is looking like it's trying to break as hard as it can. This is not the chart I actually wanted to show. It was just open, so I opened it. Let's see what the micros are doing. Everybody was talking about those the other day. We got Pepe. Look at this. This is why. You see this? People buy, here. You realize somebody on Pepe, for this price action to go up here, somebody got left holding the bag up here. So I'm not going to tell anybody what to buy or what not to buy, but I'm just saying, look at this chart. People don't know what the chart is, don't know what this coin is back here. It's irrelevant because it's a meme coin. And then they get excited because they had a friend make money from buying there before them, and the price went up to here. That's 850%, right? And maybe they sold there, and you're like, oh, you made 8.5x on your investment. Oh, and then they find somebody else that got rich because they sold right here at 1,000x or 1,000%. And then, okay, they try to figure out how to buy it. By the time they figure out how to buy it, they buy it. There's people that get left holding the bag, buying it way up here, only to immediately have it drop. Look at that, 75% in the matter of 6 days. And now, will this get another pump? It's very likely. It could very well happen. But my point is, if you are going to trade these sort of assets, you need to have a strategy in place. And for instance, if we're looking like this, we can do option F, go to the top, go to the bottom like this. And if you're going to buy anywhere in here, here we're at a low. If you were to buy anywhere in here, knowing that you should take some profits off the table if you get, you could ladder out, somewhere in this zone here below the golden pocket, ladder out another 40, 20 or 30% somewhere in this region, and ladder out a little more here and leaving the small amount that's in your things to be what Wendy O calls the moon bag. That's an okay strategy if you have a plan. Looking at Bencoin, I think they got their deal locked down. Where, and I'm actually really excited for this one because it is, I was doing some TA for a friend the other day, because they're really trying to implement something that, there's zero access to the funds, they can't be rugged now that they've, acquired it. It's going to be a foundationally run thing, and all the profits from the liquidity pools in this, are 100% going to be going towards, crypto education, crypto lobbying, crypto awareness campaigns. So it's basically fulfilling. Remember when BitBoy was having trouble getting funding for a bill? It had to be like several $1 million. Well, now with this is going to be one of those things that can help drive the crypto ecosystem forward. So I'm very excited for them to be a part of that. At some point, I will allocate some to that for sure. But I want everybody else to front run me. Algorand looking weak as it can be. Look at Algorand Algorand is looking weak. Look at that. Is this? Yeah, sorry. I just forgot Algorand looks so darn. It was this on. Oh, it's not on log. That's why I was like, this looks so, I was like, did we have that? Oh man, that's why you got to look at all the data on your chart. Yeah, so this is looking pretty weak. We do look like we're at a sort of near the floor region here on Algorand. Are they going to be drawn into more of the speculation regarding what's going on with, the security that tied in with that lawsuit that Gary Gensler part with Bittrex? This is looking very weak. However, at the same time, could we be looking at something, option T? I'm just doing this. No, that's just ugly. Sometimes you just got to experiment with where you're Where your trend lines are. This is looking rather weak. Let's go to our trend. This is looking rather weak, but at the weakest points tend to be a spot that, you know, things can reverse. This is a known level. I haven't looked at the order books on this yet to see if there's a lot of liquidity buying, you know, basically defending these positions, because it is this the low, you know, pretty close to the low of this cycle. But if this does lose this level, we could be dropping down in this 10-cent range on Algorand. As it stands right now, if we look just even on the traditional, this is look at this. You see this bullish divergence? This is moving up while this is moving down. On the stochastics, this is stochastic bullish divergence, but this is just getting rejected by this. I think this is a 20 line. Yeah, it's just getting rejected each time. If we can't break above this orange line and find our way to slightly, you know, fight our way up to the 20-cent level, or even come across over here to the 17 or 18-cent level, this could get very bad pretty quickly. But it does look like there's some strength coming in here. If we look on Market Cipher, we can see also weak, but we are getting, it looks like we're about to have a little bit of a anchor wave, trigger wave. If we look on BitLab Trading Stack, we can see we had some bearish divergence on volume, which called that signal, along with the relative extrema. Boom, right there. That was a great sort of trigger. And then right here, we're getting a sort of bullish divergence right here on the relative extrema. And we also see this wave is coming up, and this is neutral. This is on the daily. Let's come down to the 4 hours, see what's going on here. Yeah, this is trying to, but it's immediately getting rejected. Once we break through this level, I think some strength will come in. Once we break above this EMA ribbon and that 50 line that we saw. But I love you all. Make sure if you haven't yet, you come over to bitlabacademy.com. Check us out. Get involved. Hit the enroll now right here at the top right. Mine says my account because I'm logged in. Or come right here. Start your education for free. That brings you to the two options for just a limited access for the beginner, very beginner, Bitcoin 101, Bitcoin 101, Blockchain 101, Smart Self-Custody. And there's a beginner's course. It has just a small group of some lessons every beginner should take. And they're pulled from many of the other lessons that we have in here. Also, sign up for this email. I will be getting an email blast out this week with some alpha as well as some the last sort of run of the coupon codes before it's no more coupon codes. So get involved here. I know Alexandra G threw that coupon code in there, but you can also just sign up right here, become a member all access. There's plenty of places to do it. And if you have any questions, come to the FAQ right here. And other than that, I just want to say I'm going to be doing some stuff on BitBoy later. So come drop some lab coats in the chat. Be positive. Let's be a positive, encouraging group in the space. I love you all. Hit that like button, hit that subscribe button, ding that bell if you have not yet. Hit a bunch of those emojis in the chat right now. And you know what? Again, my name's Kellam. Thank you for being here. I hope you have a wonderful day, and I'll see you later. Adios, muchachos. Thank you for coming. Thank you for always tuning in. Adios, muchachos. Thank you for being here. Retweet the Twitter thread and share your friends and give blah, 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 blah.